Welcome all to the Node. I am Mike, aka Veteran Crypto, and this is your place for news, interviews, and education. So, with that, interviews. We haven't had one in a minute, but I've been working on some, and we looks like we have one locked in. So next Tuesday, we're actually going to be interviewing head of ecosystem. His name is Gustav from Zenith. So we got the questions over to them to make sure that all the questions that we're asking are up to date with their tech and things like that, and they're reviewing that and dialing that in. But we are going to bring you that next week. So actually, let me add David here real quick.
Howdy.
Hey, what's up? So I was just telling them about next Tuesday's Zenith interview that we finally got dialed in.
Oh, dude, that's awesome. Oh, man. Yeah, because Zenith looks like a very, very interesting platform. Being able to essentially like port or bridge, EVM chain, and it looks like even Solana or move ecosystem dApps on over to Canton. That looks really, really cool.
I think it's gonna really put Canton on steroids. To be able to make EVM dApps available on Canton is going to be a huge step forward for that interoperability, across those two networks.
I think so too. Because right now, like, what DeFi really is there on Canton? What retail facing DeFi is there? I mean, is there retail facing DeFi?
Well, there is. There was that article that we went through that there was 7 or 8 that they listed. But the problem is that there isn't a whole lot of TVL on any of them. So, not a whole lot of liquidity on the retail side. On the institutional side, there's a ton of liquidity being moved on the Canton network. But yes, when it comes to retail and retail DeFi, it's in its very beginning stages. So, being able to have that interoperability with Ethereum and Ethereum dApps to be able to move liquidity across the Canton network and potentially bridge over that DeFi liquidity from there could be very interesting.
I think it's going to be. I just want to be able to do stuff. I want to be able to do interesting stuff. Using Canton natively on the Canton chain. So
I want more room for activities, so we can do like karate and stuff in the garage.
Yeah, I mean, sure, why not?
You saw that on Step Brothers, didn't you?
Yeah. I'm just thinking to myself, like, as dude, Mike, yesterday that Claude Fable release.
Yeah.
Like, dude, like that shit is next level. Like, it's gotten to every time there's some type of amazing AI model drop from one of these frontier labs, it always feels like, oh, this is so amazing. Like, the next one is going to be even better. And then this most recent Fable model launches. And I mean, look, like the things that I can build now, like all those things that I wanted to be able to build that I just couldn't get done with Opus, couldn't get done with Composer. Now, all of a sudden, all the really complex, amazing work I can suddenly do. And like, dude, that newsletter, after Fable dropped, I was able to get the newsletter from like kind of shitty to like much, much, much better. And, now it's just a matter of, okay, I need to determine what is my token budget going to be for building this thing out, because that's really going to determine like how quickly I can do it. Yeah. Because it's pretty close now. Like, I think that we can all see like what this thing is going to become when it's really done. And so one thing that I'm thinking about here, Mike, as you go down and you take a look at the news list, the newsletter itself, like the way that it is, presented here. So one update that I just shipped, like I think it just shipped to production like a couple of minutes ago, is to make the written analysis. You see here where it says the big story, how thin it is. So it's going to make that written analysis much, much richer. So all of the sections of the newsletter that are like a written piece of analysis based on your watch list items, that's going to become much, much richer. And I think it actually works like right now, this moment. So I bet that if you refreshed it and ran it again, that it would probably be a much richer written report at the end there. So
I'll try it real quick.
Yeah, but I did another thing this morning. Like I just, for whatever reason, man, I was up at 5:30, just feeling good, And so like I got started working at 6, and I got a lot done this morning. So the API works now for this thing. So I turned this into an API. Now I'm just testing it myself first. Anyone who wants to, request access, they can do that. But so it just regenerated. So let's see. Did it work? Okay. So, all right. Well, I mean, look, that's data in and of itself.
No, like I said, it's still given a lot of really good info. It's so we can start going through this, but yeah, let's go ahead and dive into the news, and then we'll go from there. Speaking of AI, when I was doing some deep research this morning on Morpho, Gemini was like kicking me all kinds of errors, and so we might have to shift over to that Zenith one that you ran, for prep, to kind of educate people on that project for the interview that's coming up on Tuesday, and then maybe we'll have to do Morpho tomorrow or something like that.
Yeah, I think we'll be able to do Morpho, and we'll be able to do
a KTA. We got Morpho. I got Morpho done. I just wasn't able to get KTA done. Sorry.
Oh, right. Yeah, Keeta. Just because Gemini kind of shit the bed today.
Yeah.
I don't know what happened, but whatever it is, not good. It broke.
Yeah, no, it's on their end. I looked up the error, and it said that it was basically on their end, and it wasn't anything that we were doing. All right. So let's see. Crypto markets remain gripped by fear. Let's see if we got NVIDIA stock pops. Its CEO thinks the chip sell-off is a good thing. Let's see what's up with NVIDIA, because I know that tech right now is a big part of what's moving the traditional markets. There we go. So NVIDIA stock rose on Monday as CEO Jensen Huang brushed off last week's chip sell-off. The shares were up 2% at $209 this afternoon's trading. The chipmaker stock was recouping a part of its 6.2% drop on Friday as investors in the wake of underwhelming guidance from Broadcom and concerns about higher interest rates.
Right.
What's up?
Right. So the Broadcom, I think they missed when they reported. What is Broadcom? BRD, Broadcom.
Broad is in wide.
Avgo. Avgo. It's the ticker is Avgo. And Broadcom, they reported earnings last, it was June 3rd. Okay. So Wednesday, June 3rd. So a week ago, exactly 1 week ago. And when they reported, they were sitting at all-time highs. The all-time high was like $500. And after Avgo, Broadcom reported, they're a big, this is like $1 trillion tech company. Maybe a lot of people don't know this, but Broadcom, big tech company, one of the $1 trillion ones. And after they reported earnings, gapped down 13% and has continued to move lower. Broadcom is off by 24% from its all-time highs just in the last 7 days. The last 5 trading sessions. So that's a big deal because it's one of the big chip makers, and if there's a pullback in these semiconductor stocks, that will probably feed through to the rest of the index, because the indexes are so heavily weighted towards these semis and tech stocks now.
No, absolutely, and and it's pretty much what's driving the stock market up right now is tech stocks. I mean, that's really what's leading the charge. And if those falter, and there's a lot of people that have been pointing out, you included, that there's kind of this incestuous freaking buying of each other's stock. Like there's like $1 trillion or something that just keeps circulating amongst those leading tech stocks. So it looks like there's this constant buying going on, just driving their stock prices up. So to what extent that's going on, I won't pretend to know, but I keep hearing that from multiple sources.
Well, yeah, I mean, think about it this way, Mike. If let's say that I'm NVIDIA and you are
Microsoft.
OpenAI, Microsoft, whatever, and I lend you $100 billion because we're buddies, $100 billion. Hey, don't worry about it. So I give you $100 billion.
Get that back to me whenever you got a minute.
Right, tomorrow. So I lend you this $100 billion, right? And you take that $100 billion, and then you're like, I'm going to buy chips, and you buy chips from me for $100 billion. So, like, I can count that as earnings, but is that really earnings? Like, if I gave you the money to buy my stuff, like, that's kind of circular logic there. Like, how much of these earnings are actually real, legit? I don't know. I mean, it seems like that's a form of leverage, maybe. And eventually people are going to care about it, but right now it seems like they still don't care. All we've done in stocks is pull back like a couple of percentage points, like not much at all, So let's see what Mr. Huang is saying, Mr. Jensen.
That was basically it. It was here. I'll go back to it here. Oh, never mind. It's wanting me to freaking buy their shit now.
Nah.
So basically, what it was saying before is that they're not worried about the sell off. That they feel that their stock is resilient, will bounce back from the pullback, and currently it's down 2.64%. So I mean I kind of think at some point they're going to have to pull back. I mean, they've just been running hot for way too long. When that's going to be, again, I'm not an expert. I won't pretend to know, but there's only, some of these valuations on some of these companies, like, the SpaceX, IPO that's about to launch. It's like $1.6 trillion valuation. And if you look at, their earnings, they're operating at a loss, after their R&D and their operating costs and all that stuff, net, they're operating at a loss. And so, giving it a $1.6 trillion valuation, I don't know if that's something I'm wanting to buy into.
That's a pretty good reason for stocks to start to correct a little bit, simply because, things are a little bit, maybe frothy isn't quite the word, but, valuations that stretched, like we got to do some deep dive research on SpaceX, because because it's a 2 trillion, IPO doesn't necessarily mean that it's super overvalued. Although, like I've read that they generated like $20 billion in revenue like last year or something. So
but
it seems like
operating expenses and R&D and all that stuff, the little bit of research I did so far, they end up being net negative.
Yeah, it's not good. And another thing that I think about with this is
that's systemic in crypto. Like Cardano, XRP, all these projects with tens of billions of dollars worth of market cap, basically valuations, and they don't generate any revenue or fees to speak of. It's this. There's issues all over the place. It's not just stocks.
Yeah, no, it is. The thing about stocks, though, is that whenever you see like big IPOs like this, late in a bull market, then usually that marks some type of a top for a little while. So we get SpaceX on Friday. We get, Anthropic and OpenAI pretty soon here. So those IPOs are definitely going to determine the course of the market for at least the next, 90 days into the fall. but we got to ask ourselves, like, what's the catalyst for there to be an actual pullback, in stocks? What would be the catalyst for that? And that's why I'm sharing my screen right now. And, for anyone who hasn't had a chance to join the Discord yet, please do, because I post all this alpha in the Discord every day, throughout the day. We're in there 24/7 in the Discord. So, but this is really important because we've got a Fed meeting in 7 days. So the Fed is going to get together in their cave of dastardly wickedness, and they're gonna start talking about interest rates and shit. Like, fuck them. The Fed is a fourth unelected branch of government. It's a banking cartel. It should be abolished. The Fed can fuck off, but they are meeting in 7 days' time, and that's why I want to share the 2-year. So
you might say they're doing a sit down.
They're doing a sit down.
You want to come for a sit down?
Hey, Johnny Boombats,
Yeah, this is my consigliere.
Yeah. So but the reason why this Fed meeting is important this time is because if we take a look over here at FedWatch, right? So FedWatch, we've got in 7 days, we've got the next FOMC meeting. It's going to be, I think, Kevin Warsh's first meeting. So that'll be interesting, but take a look at what's getting priced for July, right? So the next Fed meeting is in a week, and then the one after that is at the end of July. And this is very important right here. Check this out. So 375 to 400. Let me zoom in so everyone can see this. So right now, the Fed funds rate is sitting at 350 to 375. So that's measured in basis points. So the Fed funds rate is between 3.50% and 3.75%. So that's the rate right now. There is a 3% chance of a cut at the next Fed meeting, which is, not the next one, the one in July, the one at the end of July. But check this out. This is the important thing. There's actually a 12.3% chance now of a rate hike at the end of July meeting. And the reason for that is we got CPI data today, and CPI came in really hot, really, really hot, like 4-point-something%. So
those who don't know, what's CPI?
Consumer Price Index. Okay. So is just a fake measure that the government uses to basically
the ever evolving data points that they use to divine, with their dowsing rods.
Exactly. Because, look, the way that they calculated it in 1980 is way different than what they do now. And there's really no excuse for not having good data. It seems as though the reason why their data sucks is because they want it that way. That way it can justify whatever policy mistake they want to make. So US CPI, it came in today at 4.2%. And if anyone has ever bought food at these places called grocery stores, you'll know that inflation is not 4.2%. We're losing like at least 10% per year in purchasing power. And it accelerated since COVID, the 2020-21 COVID policies with all that money printing. And so now we get, this hot CPI. And we were talking about this. Let me bring up US PPI. We were talking about this over the last couple of weeks here, because US PPI, which I'm going to share right here, this is the daily. It prints, once every week or so, I think. So this is US PPI. This is the producer price index, up and to the right. So there, right here, this is the 2008. This is the 2020, 2021 into 2022 inflation that we experienced. So this is the first dip of that inflation.
The COVID inflation.
Right. Well, it was the COVID policies, actually, I think. It was not necessarily that there was like a mild cold that was killing sick people, but it was that the response to that was to shut down the world and force everyone to stay home.
We all know what actually.
Well, it was the money printing. It was printing $6 trillion, something like that, between $4 and $6 trillion in 2 years. That created
shutting down the economy and just
right, all
massive,
that.
massive freaking damage to
Right.
the dollar and the economy and
Yeah, so I mean, here's the first pump, and this is not a good pump. This is a
no
bad pump. So this is that first pump out of inflation, right? And this is the PPI. So this is the producer price index.
that pump is pumping us from behind.
This is a bad pump. This is bad because
bad pump. That's a prison pump.
This is not good. Because what this is telling you is that you're about to get fucked. So like, because this is the producers. Producers are saying our input costs are up 15% year on year. And that's understating it because these numbers are bullshit. So that's number one. But this feeds through. This is a leading indicator for CPI. So this is the leading indicator for the consumer price index. This is the producer price index. This leads the consumer price index. And so that's why a couple of weeks ago, when we got that really hot PPI print, we were saying like, hey, this is going to feed through into CPI. That's exactly what happened today. So we got that CPI print. It was 4.2%. And so what that tells us is rates need to go up, not down.
Yeah.
So if we take a look here at this is the 2-year. So this is the 2-year Treasury bill. And this is going to be really interesting. Check this out. So if we take this is the bill. That means the yield on the bill is the inverse of the price. Right? They move inversely to one another. So if we invert the scale, then basically we've got a chart of the yield on the 2-year Treasury bill. And so what we can see is it's broken out and it's starting to push higher. Now, why is this important? Because we were just talking about, a Fed meeting. Why are we talking about the 2-year Treasury when we're talking about Fed funds rate, right? Why are these two things important to talk about together? Well, because it looks like there's a pretty high probability that in, another maybe 5 weeks, the Fed actually hikes. Now, they probably won't, but maybe. We got to see, feel out this guy, Kevin Warsh, and see what's going on with him, at this meeting in a week's time. But take a look at the chart. So let me bring it back to the chart because this is the 2-year. Mike, you were asking for a catalyst. Like, what would the catalyst be for stocks to move lower? What would the catalyst be for that next leg lower out of Bitcoin? What would the catalyst be for something like that? Well, if this is the yield on the 2-year, take a look at what happens when I throw the Fed funds rate over top of it. Check this out. This is super interesting. And then let me zoom out to a weekly so that we can get a bunch more data here. Look at that. So let me just change the color so we can see this maybe a little bit more clearly. I'll change it from blue to, maybe I'll change it to white. How about white? So we can all see it. So this white line here, that is the Fed funds rate, okay? And this candlestick chart, that is the yield on the 2-year US Treasury bill. Look at them, they're the same. Yeah. You're looking at the same thing. It's just the Fed acts after the bond market prices something in. Mm-hmm. And so what is going on now? What's going on right here? Well, so let's just go ahead and make this like work, right? So there we go. So here's the Fed funds rate in white, and Fed funds is down here. 2-year Treasury is up here. 2-year Treasury is saying, hey, inflation, like yields need to go up. And the Fed is saying, fuck your inflation. Like, we print money here at the Fed, don't you know? And so there's this gap between... Right.
Don't you know?
I know. So we've got this gap between reality and what policymakers have set. And so basically the problem here is that the US federal government is spending much, much more money than they take in. And, so that deficit spending coupled with, this crude oil and these, crazy people in Iran, crude oil being up here at $91, the deficit plus, high energy input costs, that means we're going to see US PPI That's the absolute number, but US PPI, the year-on-year change, that means we're likely to see this go up, like continue to go up and not just turn around and reverse. That means we get that double dip inflation that everyone's been like, so worried about. So yeah, man, that's going to be interesting to see what happens here over the next couple of months. See if inflation continues pushing higher or not.
No, it definitely going to be interesting to see, kind of out as things unfold, when it comes to the macro markets, especially with just the ongoing. I know everybody's tired of hearing about it, so am I. But the ongoing Iran conflict, all the macro environment when it comes to oil and its effect, on the world economy, inflation, all the stuff that you just went over, the tech stocks, with that incestuous relationship that we discussed. Crypto, it seems like daily, we're seeing different protocols and different chains folding up shop. Some of them,
Yeah.
major ones. And I think that's just going to accelerate. So, we'll see. But next up, speaking of which, Aave proposes binding new risk framework following the 300 million Kelp DAO exploit that happened, a month or two ago. But to skip to the juicy part, so the Kelp DAO incident sits at the center of the proposal's logic. Attackers exploited a single verifier configuration in Kelp DAO's Layer 0 powered bridge in April, minting 116,500 unbacked RS ETH worth approximately $292 million. The attackers deposited the tokens as collateral on Aave and borrowed roughly 193 million. And then so basically the framework of this fix, it also codifies two automated mechanisms built on the Chainlink runtime environment and owned by the Aave DAO. An automated freeze guardian that halts a reserve when a hard adverse signal is detected. And
that's exactly what you were talking about.
Yeah,
you were talking about that like right when it happened. You were talking about some way of like freezing it. Oh, yeah. Wow, they did it.
Yeah, they must have heard me.
Yeah,
I'll be waiting for my royalty check on that.
Exactly.
So that halts a reserve when a hard adverse signal is detected. I don't know why they didn't have this to begin with. And a supply and borrow cap.
Because everyone quit. Their entire like dev team and risk team quit because the one guy controls all the DAO. It's like all your DAO belong to us.
Yeah.
Yeah.
And so, basically it's not a DAO.
Nope.
So then a supply and borrow cap oracle that pulls caps down automatically as an asset's risk surface degrades. Both are defensive by design, able to tighten exposure on their own, while any loosening requires human review. Another thing we talked about, through governance or risk stewards. So basically, this is exactly what we were talking about, where I would still like to see them address on a separate note that pooled liquidity. But that aside, this is what we were talking about, automated processes. I mean, this is tech. This is software. Why doesn't more DeFi protocols have automated processes like these in place to where it snaps shut, the liquidity, and requires some sort of human review. When there's $300 million, worth of loans being taken out on Aave, that should require at least somebody to look at it and say, okay, what's going on with this? And so anyway,
so I think that it should be permissionless, but
to an extent,
they're also like I'm for 100% permissionlessness. That's my default. But at the same time, though, like there's maybe they got to use this new Claude Mythos thing and figure out some way of like making it so that someone can't just deposit fraudulently minted tokens. But I don't know. I don't think that gating it is the way. I think that it's just they need to hire their risk team back. That's what Aave needs to do here.
Well, and they do have their new risk team. The Aave or Llama Risk is their new right here. The proposal was prepared and published by risk firm Llama Risk and is open for evaluation by Aave Governance. But like you said, Aave Governance is basically Stani, who because they own the Aave DAO owns most of the tokens, so they have the vote. Whatever they want to vote. That's why the old DAO manager left is they because Aave was putting up proposals basically to give themselves like 200,000 Aave tokens or something like that, and they were like, no, it's you can't just vote to give yourself money, and that's basically what was going on. And so they said, okay, well, if this is how it is, we're out.
I've got a great idea, Mike. We start our own DAO, and then we just vote to give ourselves all the money, and it'll be perfect, man. Yeah, it'll be
a create DAO. Step 2, step 3, profit.
Exactly right. Exactly right. I mean, dude, like how many instances have we seen recently of these, DAOs in, quotation marks, where it's really just like one dude, or how many, instances recently
we were talking about yesterday where there was one MetaMask wallet that had 3 of
the
dude.
That was Humanity.
Yeah.
The Humanity protocol, which, dude, that's looking to me more and more like it was actually a hack from within. That's what it's looking
just
like.
A straight up rug pull. I mean,
that's what it looks like. Yeah. That's a shame.
No, it really is. It really is. All right. So what else we got going on here? So in traditional markets, U.S. stocks lower on tech sell-off. S&P 500 and NASDAQ declined amid renewed concerns over elevated AI valuations. Energy outperformed on oil price strength. So what are you seeing on the S&P 500 and in this tech sell-off? I mean, does it seem like a lot of this stuff is correlated, or are things moving independently, decoupled from the overall macro market, or what is it that you're seeing in the traditional markets right now?
Yeah, a lot. We've been going straight up until the past week and a half. So really for me right now, Mike, it's just a little baby pullback. And this is what I was looking forward to because I thought that it would lead to the next leg down for Bitcoin. And so I built this app, dude, Mike, you're going to be blown away by this thing. It's like, it runs off of some of the newsletter information, but really it's its own engine. So I'm going to share that later on in today's call, but the S&P down less than 5%, from all-time highs. And all it did is break out. So here's resistance, here's the breakout, here's the retest. So all we've done is test the breakout level. We have not broken down. That's the S&P. If we take a look at the NASDAQ, I don't have this drawn in, but the NASDAQ is pulled back by a greater percentage amount than the S&P has. Take a look at the Russell. The Russell seems to be telling me that maybe there is not a rate hike. That's what the Russell is telling me. But equities are going to react maybe later, and then when they do care, they're really going to care to rates. I mean, so with the S&P starting to pull back, we've got to take a look at the VIX, right? Volatility starting to perk back up a little bit here. So, if this sell-off, it's a baby dip correction, not even a correction. A correction is 10%. A dip is 5%. A blip is like 3%. A bear market is greater than 20%, corrections, dips from highs. So what we're seeing right now is like a dip, a little baby dip. And we're just getting a little bit of movement to the upside out of the VIX, not really much to speak of. And then if we take a look under the hood at the biggest components, you got Tesla. This is a weekly. So Tesla, just basically, if we just take a look at this, year to date, or even just over the last, 18 months, Tesla's moved sideways. Like if you bought Tesla in January of 2025, you're flat, So this one's just kind of been meandering A lot of options volume though. Apple's pulled back from its highs, and Apple is, doing its best to cling to that breakout level. So big run up, breakout above trend line resistance, just like the S&P did, but now starting to actually break back down below what is trend line support now. If that confirms and we get another week or two down out of Apple, that would make this a big false breakout. So just want to keep that in mind. Google was up at $400 just a couple of weeks ago, and put in a little bit of a topping tail here on this weekly, and now we basically just filled the gap. So if we zoom in from a weekly to a daily, then you'll be able to see that when Google last reported, gapped up, gap and go, and all it did was fill that gap. So if this breaks to the downside at 355, then maybe you start to think about 350, only a couple more points until there's some support. If that doesn't hold, then it could move quite a bit lower. Google's one of the best companies out there, though. It's just that they've started to borrow. Remember, Mike, I was talking about over the last couple of months, like that we're probably going to see more companies start to lever their cash flows by borrowing to get a bigger piece of this AI pie. It seems like Google has started to do that, issuing like $80 billion in stock, and I think borrowing also. You take a look at Amazon, right? AMZN. Amazon, put in a nice breakout, retest, bounce, and fail. So there's that trend line resistance. Now that we're back down below it, you got to start thinking about this gap down here, 215. NVIDIA, that's the really big chip maker, of course. NVIDIA, put in a fresh all-time high before reporting. And then, after reporting, just kind of meandered lower. And now we're sitting, the all-time highs for NVIDIA were up here at 236. We're 13% off of those all-time highs for NVIDIA. So yeah, the large caps, we got Meta, Microsoft left here. So Meta, it's got support a little bit further down below, another 20 points lower. And Microsoft, has been just trying its best to hold on to this level of trend line, but I think it's support. Got a false breakdown, but now we're back down below it. So Microsoft it needs to do its best to hang on, to this level at 358. So yeah, there's going to be opportunities probably into the fall. And it's going to be interesting, Mike, to see what happens with that SpaceX IPO, because usually when you see massive, liquidity events like these IPOs, they tend to be, an event that marks some type of a top. So when you were asking at the beginning of the call about like a catalyst, well, no one knows the future, right? But catalyst would definitely be inflation, sticky. The Fed has to make a decision about rates, and we've got these big IPOs with markets at all-time highs. So those are catalysts to, move all of these markets in one way or another. We're gonna see what happens, though. So, got a lot of thoughts on markets here. What else is in the news, though?
I'm looking for this article. It has a Bitcoin DeFi project, Botanix.
Oh yeah,
shut down. So it issued a blunt post-mortem admitting its Bitcoin DeFi initiative failed due to lack of user adoption in the current market environment. So what do you know about? Because I know you're huge into Bitcoin, and you always talk about how it needs to evolve past just being a store of value. And for that, it needs DeFi, it needs things like that. Because basically, for the most part, Bitcoin is stagnant money. It's just money that's sitting still, and if money is sitting still, a lot of times, you're definitely not earning yield. You're not earning, with it. Hopefully, you're hoping that the price goes up, but a lot of the quote unquote experts that are wealthy and make a lot of money, they talk about this philosophy of money that sits still is lost money, basically.
Well, definitely there's an opportunity cost, of holding something that is not productive. And let's be honest, what yield does Bitcoin generate? You know, I mean, you have to do some real shenanigans and fancy, magic tricks to make Bitcoin generate decent yield. I mean, you can generate native yield on Bitcoin on Lightning, but we're not talking about much here. There are like Bitcoin derivatives on Ethereum chains that you can hold, but you'll be lucky to make 1%. So there's no DeFi really to speak of on the Bitcoin layer 1 because we don't have covenants yet. So is Bitcoin a productive asset? No, it's not. Is Ethereum a productive asset? Yeah. As much as I hate to say it, the answer is yes. There's staking yield when you stake your ETH, and you can lever up that yield. You can do a lot with 3%. But for Bitcoin, it's tough going. And so this Botanics protocol, I had only ever seen this a couple of times, Mike, as something that I could connect to, when I operated on Dolomite and GMX. I just noticed, there's this Botanics protocol. I think I noticed it also on Morpho. But never really knew what it was that they actually did. And it looks like it was a liquid staking protocol, like a side chain to Bitcoin. And there's a couple of these. So I'm just, sharing the chart here from DeFi Llama. There's a couple of these Bitcoin side chains, and I just don't think that a side chain on Bitcoin is the way. I think that the way is native DeFi on Bitcoin. So, that means either on the layer 1, which would be preferable, and I think that that's what needs to happen, or on a layer 2 like Lightning or something like that. So yeah, I mean, it doesn't surprise me that Botanics is, going the way of the dinosaurs here. I think that there's probably going to be a lot of other chains that bite the dust here, over the next 6 months into the end of the year and into December. I mean, honestly, I could probably tell you what they're going to be too if we just go down the list and just take a look at like, okay, what do we got going on here? Stacks probably won't die, but this is another one of those side chains. They got a bunch of investment recently, so they're not dying, but this is just another example of a Bitcoin side chain. And if you take a look at it, this one, it's actually held on to its TVL pretty well. So maybe this one will be okay. Into the end of the year, do you think Cardano is going to die? I mean, probably not, right? But give it another 12 or 18 months, it might. Barachain. Oh man, this one, what a disappointment. I could see this one going away for sure, because this was just like a massive mercenary, like farming chain for, basically like 3 months.
What about that? What about that OpNet? That interview that we did with OpNet. What are they up to these days?
Oh man, I have no idea. What about Sonic? I heard you talking to
Jeff was saying that there's rumors floating around that they might be folding up shop. So those that don't know, Sonic used to be Phantom. They rebranded to Sonic, and then there's rumors.
Oh, look at that.
It's just rumors, but yeah, look at that.
I mean, so looking at Sonic and Barachain and Botanics, it looks like Botanics is the first one to die, and then Sonic probably goes the way of the dinosaurs too. There's no product market fit here. Like, Mike, did you ever use the Phantom chain natively?
Never did.
Yeah, I did, and it sucked. So, like,
that's probably why they rebranded.
If you take a dog turd, right, and then you like cover it in like a piece of,
you polish it up, make it nice and shiny.
You gotta polish up that turd.
It's a brand new turd.
Look at this turd. It's a billion turd.
This ain't that old turd. This is a new fresh turd.
Nah, this is the new turd. New smell. It's got new turd smell.
That's right. The new turd smell.
Got up to $1 billion in TVL. Sitting at 20 million now. This thing's done. Cooked, So yeah, I think that we're going to see a lot of other chains fail because, like, come on, like winner take most. Like you don't need, 100,000 different chains.
Adoption, revenue and fees being generated, profits. It's
Right.
what we keep saying here is a lot of these projects are staying alive, hyping and dumping the token on retail to pay for operations. It's how Ripple is, growing and buying, banks and all these acquisitions that, people think is bullish for the token holders. The token has no connection to the profitability, even if Ripple ends up being like the World Bank. The token has no connection to that. Ripple just sells the token to fund operations. It's in all of their own documentation. I mean, look it up for yourself if you don't believe me. It's how they have 1 billion tokens that are unlocked monthly. Sometimes they relock some of it, but a lot of the times they sell it to pay for salaries and pay for all those offices in New York and San Francisco, to buy the banks and the different licenses and stuff like that, to try to become a bank.
So, Mike, I've got a question for you, bro. Have you ever used the XRP ledger? I know you have, but have you ever used DeFi on the XRP ledger?
Never, because it's shit.
Right.
I'm not going to split hairs. It's literal shit. There's nothing on. There's some tokenization going on the XRP ledger, but that's not bullish for the token. The token is like 0.00001 XRP per transaction. I mean, it would take thousands of years to just put a dent in the supply. No time in your lifetime or any of your lineage is you buying XRP going to go to $10,000 in my opinion.
Well, no, it's not. It's not doing anything like that because scam projects don't get adoption. But here's another point though. Like we're talking about these chains, going the way of the dinosaur, right? So we were starting with Botanics; they are folding up shop, and then we talked about Sonic, looking like shit, and then
Ricky Romero. I've gone kind of online in chats, known Ricky for quite a while, saying look at Athena's TVL. I did see some news about Athena and some bullish news on Athena. So check out the TVL on Athena.
Oh yeah. So Athena has experienced like a significant contraction in TVL, from the all-time high, which was right before, Bitcoin put in its all-time high. So the all-time high for TVL was like 15 billion for Athena. Now it's sitting at just below 5 billion. So big drawdown there. But this is, its first cycle. Okay, so the first full cycle for Athena.
Well, really quick, there is some news. So here, I'll share this real quick. So Athena is partnering, and again, this is just their partnering. We like to stress that here, where when there's talks or there's rumors of, until they're actually actively deploying and it's actually generating revenue, you take it with a grain of salt. So Athena is partnering with Centrifuge as a strategic tokenization partner with the integration of JAAA, Janice Henderson's AAA CLO strategy, into USDE's backing. This is the first non-T-bill RWA collateral in USDE's backing, approved by the Athena Risk Committee following independent due diligence. Every RWA is evaluated against 4 strict criteria: liquidity, credit quality, drawdown profile, and pricing transparency. AAA RWA returns are driven by factors independent of crypto markets. Diversifying USDE's backing into these assets strengthens its resilience across market cycles. So what are your thoughts on that, David?
I like Athena. I like Centrifuge. I think that, the ENA token, it would definitely be worthwhile to run deep dive research on Athena and the ENA token, because that's the governance token. There's a lot of rumors that it's just a VC coin. And if you take a look at the performance of it, it's not exactly up and to the right, so
all right, tomorrow, Athena and KTA.
Awesome. Yeah, so ENA is the governance token. And then USDE is the algorithmic stablecoin. And then SUSDE is the yield-bearing rebasing stable. So that's the like Athena, coin trifecta.
Yeah.
And maybe if we find out that the tokenomics are not horrible or something like that for ENA, it could be that ENA might be a great moonbag addition, something like that. But I don't know. And I see the Big Lou is posting about Radium. Yeah, the Radium got hacked for 1.5 million earlier today. Yeah. So Radium, the big DEX over on Solana.
Yep. So looks like we got a couple more minutes. So SpaceX just unveiled a satellite whose only job is to run AI, not internet, not GPS, just compute floating in orbit. It's called AI-1. And the reason behind it breaks your brain. AI data centers on Earth are hitting a wall, not a chip wall, a physics wall. They need staggering amounts of power and water just to stay cool. And we're running out of grid and land to build them. So Musk's answer, stop building them on Earth. In orbit, the sun never sets. Free power 24/7. No water for cooling. You just radiate heat into the vacuum of space. The two things choking AI on the ground barely exist up there. And here's the wild part. Musk says it's easier to build than Starlink satellites. Strip out the complex antennas, and it's a lot of solar cells, a radiator, and some laser links. One AI-1 carries the compute of an NVIDIA GB300 rack, the same hardware data centers fight over down here. AI-1 is just the first one. The plan is a constellation of up to 1 million of them, and the timing isn't an accident. SpaceX goes public this week at a 1.75 trillion target. This isn't a rocket company anymore. It's positioning itself as a power grid for AI in space. The race for AI compute just left the planet literally. We've talked about this.
Dude, this is so cool.
Yeah.
And I would love to see this IPO on Friday just send the markets into the stratosphere, just like number go up, run it up. But at the same time, like the contrarian in me and, the market observer in me is saying, well, hold on a second. We're at all-time highs. This is like one of the biggest, if not the biggest, IPO in history. And whenever we have really big IPOs at, late stage of a bull market, that tends to mark the top for a little while. So, maybe this time is different, could be, but I hope it is. I would love to see these tech stocks just continue to run, and this is game-changing stuff. And what Musk is talking about, not just with, the space lasers or whatever, but also, Starlink, but also with robotics. I think that is such a big deal. The robots. So I think that, this bull, even though it looks frothy, I think it could expand even further. I think that, give it another 5-10 years and we could see markets, double and double again. So, yeah.
Well, let's take a look at this video real quick. I'm really interested in this tech because this is something I've been thinking about for years now.
The more challenging part is figuring out how do you get the power for it, and that's where a lot of what we've worked on for existing like Starlink technology, the solar arrays, are what we want to utilize that expertise to be able to build a satellite that can actually launch the critical components of the data center into space itself. We like to look at this and say, like, what is the actual engineering problem here? And it's really a combination of delivering power and then taking the waste heat and energy away and sending it into the vacuum of space, as you mentioned.
This is our AI-1, if you guys want to walk us through.
Yeah. So the first thing that we're really looking at here is like, first you've got to make something compelling, right? And we thought that the right place to start is around the 150 kilowatt like peak power level. But as we look at the workloads with our experience with XAI, we get to actually see that we can also support about 120 kilowatts of average compute. There's a difference.
Yeah. What we're showing here is kind of a draft version of the version 1 of the SpaceX AI satellite, the AI-1, I guess you could call it. And seems like a reasonable place to start is 150 kilowatts peak power, 120 kilowatts sustained power, and to give you a sense of what does that actually look like in terms of the size of the radiators, size of the solar panels. The assumptions here are 250 watts per square meter for the solar array, and about 1,400 watts per square meter for the radiators. So the radiators, these are double-sided. Radiators are radiating both sides. They're oriented knife edge to the sun, and it's 1,400 watts per square meter is a very achievable goal. Over time, we think we can probably do above 250 watts per square meter and above 1,400 watts per square meter for the solar panels and radiators, respectively. But this gives you like this is pretty much what the satellite's going to look like.
Yeah.
It's a lot of solar panels, radiator.
So one of the things that in the chat that was it not Scoop Boy? Somebody in the chat was talking about how basically the GPUs or the CPUs need to be replaced, upgraded, as tech gets better and stuff. I don't see that as an issue because with the satellite up there, I mean, at the beginning of the video, it looked like it was all modular to where they could have robots go up there and be replacing those on a maintenance routine maintenance trips, be going through and rotating through them and just pulling out the old ones and putting new ones in.
Mike, this was a point that Michael Burry made about like, for example, I think it was Google's TPUs, but also NVIDIA's GPUs. Yeah. And Michael Burry, the famous short seller, what he was saying is that the life cycle of these things is that they become obsolete within like 24 or 36 months. But what Google was saying was, okay, yeah, there's a newer generation, they become obsolete, but it's not like we stop using them and throw them away. Like they still remain at 100% usage. So just because there is a newer, more efficient version of the GPU or TPU or whatever they're going to throw up here into space, doesn't mean that what they've already got up there is like valueless. Like it's still of great value. So I think what they should do, actually, you see what Crispy said in the chat, if windmills make sense, then this makes sense. I think, why don't they just take windmills and put them in space? That'd be about as good as the windmills here. Harvest all that space wind. You know
what? We're going to touch on this. I apologize that I wasn't able to get the deep research done on Keeta for today, but this is something, and I think it has a little bit to do with kind of some of the recent positive price action that we've seen on Keeta. Is it's they have this new product called Keeta Personal. And so let's watch this. It's just like a quick 30 seconds.
Well, it's called Person.
Person. It's basically setting up a bank account. That you can integrate with your bank account.
So Mike, what is it? It's just, this is a new wallet.
Yeah, it's a wallet that you can integrate with your bank account. So basically, you could have it to where like you have an AI assistant that can pay your bills for you, all that kind of stuff. So it's just basically just kind of putting your bank account on steroids.
That's cool.
And also you can have like your check direct deposited to it, your ACH, all that kind of stuff. So it just it looks like that. And we'll get into it tomorrow, on the deep dive. But it's something that I found interesting. Actually, here.
So Keeta,
Alex just heard about.
What's that?
How do I? So I'm looking at Keeta the chain. It's got the Alpaca DEX and it's got the Murphy DEX. And I want to be able to try this out. Keeta the protocol. how do I try this myself? Creating one of these.
If you go to the main website, I would guess that if it's live, that you could do it there. Let's actually watch this real quick. I think this might explain a little bit, actually, instead of just.
Oh, I found it. Yeah.
Keeta and decides to stop using her traditional bank. She opens an account with Keeta Personal, and within minutes, she has a checking account that supports both fiat and crypto, all in one place. Her employer sends her paycheck directly to Keeta using standard banking details, just like any traditional account. When rent is due, Alex pays it through Keeta. Later, Alex converts some of her balance into another currency and sends it to family overseas, completing the transfer in seconds at a fraction of the cost. She can also move funds across blockchains seamlessly, without needing multiple apps or fragmented exchanges. As Keeta cards roll out, Alex uses one for daily purchases, fully replacing the need for a traditional debit card. No bank branches, no fragmented exchanges, no unnecessary fees. Just one unified financial system. Keeta Personal becomes Alex's only account. Open yours today at keeta.com.
Yeah.
Very cool.
I think that's we saw like a 40% pump at one point the other like a day or two ago, and I think this has a lot to do with it. I mean, because this is basically what a lot of like Ripple, and XRP with the cross-border payments or remittances. It touched on that, where using this you can send money anywhere in the world in seconds for next to nothing. And you don't even have to go through a bank. Ripple.
I really like this.
Yeah,
I really like this. This is super cool. I'd always just heard of Keeta, but I never knew like really what they did or what they do. But this is super, super cool. And the bottom line for me though is remember, we always talk about tech and tokenomics, right?
Yes.
So when I'm looking at
does the token have?
Yeah, so very cool looking tech. I mean, like super, super cool looking tech. Just need to see, like, does that mean that
Token
is the token going to be okay? So yeah, just something to think about there.
No, and that's why I wanted to do the deep dive, because we've been talking about Keeta in our community back, when we were DeFi crypto and airdrops, like over, like when it first came out. And I even did a live stream when they did the stress test, because they were claiming like 10 million TPS or something like that. And, according to the live stress test, they did it. And they had a third party, one of the heavy investors in it is like a prior Google founder or something like that. He like donated or invested like $20 million like in their seed round or something along those lines. And so they have a very deep connection with Google. But I'm very interested to see what the tokenomics look like currently. And because this is something that, again, I hold a bag of this, have for a while. But I want to know if there's any value capture for the token. If this does become a highly successful, do I benefit as a token holder? These are the questions we need to ask ourselves.
You see what Ironcrad Hero is saying? He said he got into crypto for cool stuff like this, but it doesn't necessarily make number go up. So it's exactly what you're saying, Mike. It's like, this is super, super cool, man. I really like this. Being able to eliminate the friction between fiat and crypto is the thing that drives adoption. I think that it also needs to be like, and this is antithetical to what I want for myself. But when we're talking about massive adoption, I think it's got to be something like this, but it's also got to be custodial. Like, people can't be custodying like seed phrases. Like, or their own keys for the most part. I think most people don't want that. I think most people really need a custodial solution. But also it's got to be super, super simple to use, super easy to onboard.
Those barriers to entry, because that's what keeps the majority of retail, out of crypto. is, complex wallets, complex bridging, complex swaps, losing their money. It scares a lot of people, and they don't want to mess with it. So, that's where stuff like this is going to onboard more liquidity and more people. And with more people is more network usage. More network usage potentially generates more fees and revenue. And the important thing we need to understand, just like like in Aincrad Hero is talking about, is does the tokenomics or the mechanics of the project, is there value capture between the token and that profitability? And that's the question that we have to keep asking ourselves, because otherwise, price movement is nothing but speculation. It's nothing but hype. That's all it is.
Yeah, and it's really, really easy in these, thin liquidity digital asset markets to pump a price.
Yeah.
Like when you take a look at, the price of Keeta. Yeah.
Oh.
And, people have been getting excited, just because, at the beginning of, what was it? It was Sunday. So on Sunday, it pumped up. Dude, it pumped 100% from trough to peak since Sunday, but it's given back most of it though.
Yeah,
but still, it's up 42% from Sunday though. But when you take a look just at the daily chart, or year to date, it's put in a lot of moves like that, where it's pumped and given it all back, and pumped and given it all back, but it's consistently been moving lower. So like these thin, I can share that. So these thin liquidity tokens, so like, year to date, so here's 2026.
Well, Sunday is notorious. Weekends are notorious for low volume and super easy for market makers and, people to pump and dump, the prices of some of these projects.
So check it out also. Like if we just, let me bring this up here. So this over on the right here, this is volume profile. And this is just the absolute volume, and we're using MEXC data.
Shit. Hold on, let's we're into the deep dive time. Sorry, I don't mean to cut you off.
Yeah, no, we'll hop on over there right now. Just notice the point of control is down here at 16 cents. So this is a low volume node. These get rejected. Here's where all the volume is. So I would look for Keeta to pull back even further. Yeah. All right. So.
And really quick before we get started, if you could, I love seeing the amount of people in here watching us live. If you could, if you're finding anything that we're saying, valuable or of value, if you could just hit the like button, share it, share out the stream, give us a subscribe, hit the subscribe button if you don't mind. It helps us immensely to get this information out to people.
Yeah, it really does. Like, share, subscribe. That is probably the best way that you can support us. If time, treasure, talent, stuff like that. But like, share, subscribe works really well. So let's hop on over here into the Intel library, and let's see here. Mike, what are you thinking? Which one you want to start off with here?
You know what? Let's start with Zenith, because I don't know a whole lot. I'll be honest. I don't know a whole lot about Zenith other than other than the fact that it's basically bringing EVM compatible dApps to Canton.
Okay, so that's about all I know about it too. So let's take a look at this one. This will be an interesting piece of content. I'm going to go ahead and move this over here so that I can see this a little bit better.
And those that don't know, this is our official website, thenode.pro. And what David's looking at right here is our deep dive library, our Intel library. And this is no cost. We don't charge for this. So if you want to go in here, we have all the deep dives that we've done here on the show. And you'll see the format here in a minute. But we've done Aerodrome, and we're about to do Morpho, Chainlink, Cardano, Providence, Monad, Euler, Zcash, Injective, ICP, Near. We have a bunch of them in here, and we're adding like 2 or 3 a day. So this is going to be, if you're wondering about the tokenomics, what it is that these projects are doing, who they're working with, who they're, like what kind of fees and revenue they're generating, if they're profitable or not. All of that is here. We boil it down nice and neat for you. It would take you maybe 15 minutes to go through each of these, and you'll at least have a solid understanding of these projects.
And this is no cost educational content. And this stuff is like extremely high quality. Like if we take a look at the content here on Zenith, right? And you just scroll down. So number one, you're going to get a really great piece of video content. This is an 8 or 10 minute deep dive explainer on the protocol, coin, token, whatever it is that we ran research on. And then you've got this beautifully formatted written report here that I can zoom in on. And so as you scroll down through this, you can zoom in to specific sections, whatever you want to do, or you can just read through it. It's formatted in such a way that you can actually read this thing. And then when you get to the end of the report, then you can take a look at the slide deck. So here we've got a great slide deck. And then, of course, we've got the infographic here, which is like a 10,000 foot view. But then right here, we've got the source material. So everything that we used to create this piece of content in the first place. So what we'd like to do is run through the video content first. Before I do that, though, I just want to make everyone aware of the newsletter. So this is a twice daily market intelligence brief on the assets that you care about in your watch list, delivered to your email address and generated here in your account at thenode.pro. And so this is $20 a month, but extremely valuable. And if you decide that you want to be able to chat with an AI about this, hop into the Hermes agent. I'm working on making this really, really cool, where you can, ask questions of the node and ask questions of the agent. So I'm going to get this working really, really good. Now, the community, if you want to just join and chat with us, hop into the Discord. It's no cost. And we're in there 24/7, posting alpha, chatting. It's a great community. Now, if you want paid access to myself and Mike, on Mondays, Wednesdays, and Fridays, I run a premium live call where, I go through different opportunities. And if you want to hop on, you can definitely do that. That's a paid service. It's $100 a month. Take a look at that inside the Discord. Let's go ahead and take a look here at Zenith over on Canton.
And this is the project that that David will be interviewing Gustav, who's the head of ecosystem over at Zenith, this coming Tuesday, so 16 June.
Awesome. Okay, so
the digital asset landscape is fragmented by an architectural mismatch. We have two very different ways of routing capital, and right now they cannot communicate securely. On one side, public blockchains offer rapid innovation. They give developers deep liquidity pools and atomic composability, allowing smart contracts to interact seamlessly across open protocols. But global financial institutions cannot use them. Public networks lack the rigid privacy safeguards and deterministic settlement guarantees required to comply with financial regulations. On the other side, we have private, permissioned distributed ledgers. Systems like the Canton network provide the exact bank-grade, MiCA-compliant privacy these institutions need to operate legally. The trade-off is that these private networks function as fragmented, isolated silos. They suffer from poor capital efficiency and completely lack the developer velocity found on networks like Ethereum or Solana. Zenith Network operates as a native execution layer within this ecosystem. It embeds an Ethereum virtual machine directly into Canton's regulated rails, which removes the need for, and the systemic risks of, traditional lock-and-mint bridges. It achieves this integration by running on a highly specialized RISC-V zero-knowledge architecture. To understand how this infrastructure works, we have to look at how it builds virtual blockchains, how it achieves consensus-level atomicity, and how its burn-mint economics operate. Applying zero-knowledge proofs to connect standard smart contracts with regulated settlement network.
I just had a thought. So
Mike, what did I tell you about having thoughts?
I know. I know. It's bad, very bad. My thought is there's ways, even if a project, and I'm not saying that Zenith fits this bill, but even say like they don't have a token or their tokenomics suck. The fact that it is bringing network usage to the Canton network indirectly, you can, if you're bullish on this tech, and then you could buy the Canton token and indirectly profit from the amount of network usage that it brings, because the tokenomics of Canton is such that with increased network usage, the burn goes. And so I want to point out that you can think outside the box, and I don't know yet, if they have a token or if the token sucks or whatever, but because they're on the Canton network, there is a way that you could profit from the success. So just wanted to
it's the burn. It's the burn. Yeah. So more transaction volume, more burn. So it looks like they're basically running just like a virtual machine. So if you've ever run Windows on your Mac, that's kind of sort of what this looks like. You've got the DAML consensus layer on Canton, and then they just kind of run a virtual EVM or a virtual SVM or a virtual move machine on top of the DAML consensus layer. And then all of a sudden that allows you to run, Ethereum dApps, Solana dApps, and Sui dApps, but on Canton. That's pretty darn cool. I think that's awesome.
Creates the technical capability to move trillions in institutional capital. If Zenith operates inside a strict, permissioned environment, what does the deployment pipeline look like for an engineer? The pipeline requires zero modification. Developers write and deploy unmodified Solidity smart contracts using industry-standard tools like Hardhat, Foundry, and MetaMask. This visual shows the abstraction layer in action. Standard Web3 inputs flow directly into what Zenith calls a virtual blockchain, a customizable execution environment deployed as a RISC-V program. This virtual blockchain relies on a dual-role participant model. First, the participant operates a validator node, seen here connecting to the Canton network, continuously listening to ledger transactions on their specific subnet. At the exact same time, that participant acts as the local sequencer for the virtual blockchain. As you can see, it organizes incoming EVM transactions into a sequential single-threaded order. These ordered transactions then execute entirely within RISC-Zero's zero-knowledge virtual machine, known as the R0 VM. Every block produced locally generates a zero-knowledge proof, certifying the exact correctness of the execution. This proof package is then exported down to the Canton mainnet. Notice the data boundary here. The raw transaction data, the smart contract inputs, and the counterparty identities never leave the local sequencer. The only information transmitted to the wider network is the mathematical guarantee that the state transaction was executed correctly. This is a direct contrast to standard Layer 2 rollups on public networks, which are forced to publish their raw call data back to the base layer for data availability. Because of this localized execution structure, a financial institution can interact with complex DeFi applications and prove their activity is valid without ever exposing proprietary trading strategies to the open internet. Getting an off-chain execution environment to settle back to a private distributed ledger usually requires a third-party oracle. That introduces dangerous latency and security gaps. Zenith bypasses this by integrating directly with DAML, the native smart contract language that powers the Canton network. Look at this diagram detailing the two parallel data streams. The left logic gate represents a proprietary DAML primitive called external_call. This function allows a DAML contract sitting on a Canton subnet to request an execution from the Zenith EVM running locally. By acting as a direct native conduit, this initial transmission allows for optimistic transaction confirmations with sub-second latency. The loop closes with the second logic gate, the verify primitive, which pulls the cryptographic proof down from the virtual blockchain and processes it on the Canton stream. The verify function ensures the mathematical integrity of the settled state root, confirming the off-chain execution perfectly matches the rules. If native cryptographic verification isn't exposed yet, the contract simply uses the external call function to relay the verified zero-knowledge results directly from the local operating environment.
Relying strictly on native DAML logic gates removes the need for third-party multi-signature validators, bypassing the collateral custody risks that plague traditional bridging architecture. This direct DAML integration becomes critical when processing the most dangerous operation in decentralized finance, cross-chain swaps.
Bridging.
Most multi-network applications handle these swaps using hashed time lock contracts, or HTLCs. This comparison table illustrates the operational flaws of time lock contracts. Notice the settlement speed row. Time locks often introduce hours of latency because they are gated by the slowest chain in the swap. Moving down to chain reorganization risk, HTLC claims can be retroactively unwound if one of the probabilistic blockchains experiences a split state. Furthermore, they are highly vulnerable to free option exploitation, where the secret creator of the swap maliciously waits out market volatility before deciding whether or not to finalize the trade. Zenith circumvents all of these application layer vulnerabilities by achieving atomicity directly at the protocol layer. Through its native integration, both the Canton-based DAML transaction and the Zenith EVM smart contract execution are packaged together into a single cohesive Canton transaction view. Both legs of the trade exist within a unified consensus domain. They are processed under identical network conditions at the exact same time. The outcome of this domain is strictly binary. Both legs of the swap are committed together, or they are rejected completely. There are no intermediate states. This consensus-level atomicity makes intermediate chain reorganizations, maliciously blocked liquidity, and free option exploits mathematically impossible, providing the security guarantees required for institutional trading volume. Securing this unified consensus domain requires specific economic infrastructure and validator incentives. For institutions, Zenith delivers a major compliance victory here. Network participants do not need to hold a volatile third-party token just to pay gas fees. Instead, virtual blockchains can be deployed using the native Canton coin for all transaction fees.
Wow.
This graphic visualizes the equilibrium model.
So this is super cool, man, because this means that, let's say that you build an Ethereum dApp, and then you decide you want to launch that on Canton. Well, it's going to contribute to that burn on Canton.
That's bullish. That's bullish for Canton.
That's pretty cool.
Yeah.
Aligns the token supply with network utilization. Transactions consume traffic credits, which are purchased by burning Canton coin according to a dynamic on-chain exchange rate. As network utilization has surged, daily burns have grown from 10 million to over 35 million tokens. This activity has pushed the network's burn-to-mint ratio across the deflationary boundary seen here. While Canton coin handles the gas, zero-knowledge infrastructure relies on ZK Cloud's native proof token. Compute nodes must stake proof to generate calculations and face slashing penalties if they submit incorrect data. Governing this dual token architecture involves strict oversight. Recently, the Canton governing body passed proposal CIP0091, granting Zenith a Tier 1 super validator status. This document outlines the proposal's escrow system. To prevent governance capture from day one, Zenith's maximum consensus weight of 10 is locked behind specific milestone-based criteria. By legally tethering voting power to verifiable network activity, such as issuing $1 billion in real-world assets, Zenith ensures that its governance influence only grows as it generates actual value for the ecosystem. The Zenith network resolves the walled garden dilemma by cleanly separating public smart contract execution standards from private institutional settlement. Look at this final visualization. It represents the target end state. A Tier 1 bank deposits tokenized collateral securely on an isolated subnet and immediately deploys that capital into an EVM-compatible lending market. Moving forward, the roadmap plans to expand beyond the EVM, integrating the Solana virtual machine and REST compatibility to support all major execution environments. Zenith operates as the exclusive translation layer between Canton's regulated bank consortiums and the open Web3 developer ecosystem. The immediate operational challenge is scaling the underlying zero-knowledge computation so that high-frequency trading volumes can be processed economically. By combining zero-knowledge data isolation with consensus-level atomicity, Zenith establishes the strict infrastructure required to move trillions of dollars of dormant real-world assets into highly productive on-chain financial protocols.
Dude, that looks really cool. That looks really, really cool. Let's see if we can, find out more information about actually like using Zenith. I wonder, is this something?
Really quick, I want to correct something. So it mentioned that supposedly Canton had crossed that equilibrium point where there was more being burned than were being minted. That is not the case. I want to make sure that people understand. I'm very bullish on Canton, but we need to stay factual. So currently, it's sitting at what the burn mint is. So a value of 1 means that's equilibrium. We're currently sitting at about 0.6. So we're still not there yet. But to give you an idea of how much is being burned per day is, as of the 8th, about $2 million a day, dollar value, is being burned of Canton. So it shows you the amount of network usage, currently, and that's without what we're talking about here with Zenith. So I just want to make sure I corrected that. So, but go ahead.
And dude, once Canton gets to that burnment equilibrium, gets to the point where it needs to be, then then I mean you could see that thing pull a hyperliquid times 10. And really, really run. Just taking a look at the chart, it bounced off of its 200-day simple moving average. And, during this bear market, mean,
if I could find a liquidity pool for this thing, with the way it's trending sideways.
Yeah, the sideways action is what you need as an LP, because if you're paired with a stable, you need it to go sideways. But that's pretty darn good looking to me. Just the fact that it has not broken down, as just about everything else has broken down. So I'm gonna just go ahead and add this one to the top of my watch list up here. It's gonna get a spot right there. I'll put hype above. It's right there. It's right there. And then I'm gonna take this one, bring this one down here. There we go. So, and honestly, Solana, I should move lower too. But so Canton looks pretty good. The more that I learn about Canton and now about Zenith. So here's Zenith. Let's see. How do I deploy now? I wonder if this is something that I could use right now.
You can deploy DApps on Zenith and actually earn Canton, if I'm not mistaken.
Yeah, it looks like maybe it's not ready yet.
What we should do is if we can, we should deploy some of the stuff that you're building out. Like that one assistant, that you're building out. Deploy that.
Yes, I think so. And I'm just taking a look through and trying to see how I can use this. So read documentation. Here we go. And explore the Zenith platform.
Did that instant deploy button work?
No. So none of the buttons, and that's not. It's just like an image. That instant deploy wasn't actually a.
Oh, okay.
Yeah, it wasn't a button. So let's see.
We can ask him about it on Tuesday too.
Yeah, I'm looking forward to that. It's going to be awesome.
Well, because he's the head of ecosystem, so I mean he's the one that's in charge of basically my understanding is onboarding and all that stuff of people, developers, and different things like that. So
yeah, I mean this is I'm just scrolling through this to see if maybe there's something in here that just makes it super simple to get started. Zenith stack. Okay. Well, you know what? I'm going to read over this maybe after the call at some point.
Yeah. Let's keep going with the deep dive.
Yeah. So, back on over here. Oh, where do the deep dives go? Oh, it's this one. So back on over here to the Intel library. If anyone wants to go through the rest of the Zenith content here, there's a slide deck and of course all of the source material. Mm-hmm. But I want to hop on in to Morpho. And I want to take a look here at Morpho. Let me just sign in real quick.
very very bullish on Morpho. It's basically a competitor to Aave with what I feel is a superior architecture. It has the vaults that separates out the liquidity. It's not all pooled. So I think that's a superior model. And this is just my personal opinion. It's on Base. So there's a close relationship where Coinbase uses it to facilitate its Bitcoin lending. Like all of its lending and stuff that it does natively on its platform is facilitated in the back end by Morpho. So a lot of really cool stuff with Morpho. But go ahead.
Yeah, no, there definitely is. One thing that I just want to point out though is AI XBT, the AI XBT agent over on X, has done a really, really good job. And this is just, I drew in a W pattern. I was thinking
it bottomed. Are you trying to say that Morpho bottomed?
I was just trying to draw in it. It looked maybe kind of like a W, maybe, but basically Morpho has found support at the 200-day moving average here. But the thing that I wanted to point out though is people are paying a premium for Morpho at $2.06 when you compare it to Aave. So, the Aave token, and let me just make sure that I get Morpho onto my watch list here too. This is definitely one worth having on the watch list. I can use Binance data, that's fine. So I'm just going to put it like right, where's Aave? There it is. I'll put it above Aave. So people are paying a premium for those Morpho earnings. If you take a look at Aave, Aave is generating, if not greater than the same amount of revenue, but like the price to sales is like, I think it's like a fraction of that of Morpho's. So that just tells you that, people are not willing, people are willing to pay a premium for Morpho, not willing to pay up and buy Aave. So, that's a lack of confidence in Aave and a lot of confidence in Morpho. So let's take a look. Let's play through this video content. This is all about the Morpho protocol. Here we go. We get this one rolling. Should start any
For
moment
years, decentralized finance relied on a specific structural design to manage credit, the monolithic multi-asset liquidity pool. Depositors pooled entirely different assets into a single shared smart contract basin, generating liquidity that anyone could borrow against. The math worked for initial growth, but it carried a fatal engineering flaw. Because every asset mixed into the same central contract, a single vulnerability in just one accepted collateral token automatically expels its entire capital base to systemic contagion.
That would never happen.
This is exactly what happens when that systemic risk is tested in production. During the April 2026 CapDAO technical crisis,
this is all about the
panic
April
over
one.
a single collateral asset caused the total value locked in Aave's pooled architecture to plummet from $26.39 billion down to $14.18 billion in a single month. Meanwhile, Morpho's isolated architecture remained completely unaffected. That structural stability is the reason Morpho closed a historic $175 million primary funding round, achieving a $2 billion valuation. The protocol evolved specifically to solve this liquidity bottleneck. Morpho reached this scale by dismantling the shared pool architecture entirely, electing to rebuild the global credit stack from first principles. Morpho departed from the peer-to-pool experiments of early DeFi to operate as a modular settlement layer. It is a design engineered to handle Tier 1 institutional volume without introducing the risk of systemic contagion. The protocol's initial breakthrough, the Morpho optimizer, successfully improved interest rates through peer-to-peer matching, but it was built on top of traditional lending protocols, meaning it remained strictly bound to the risk parameters dictated by those hosts. To address the constraints of the optimizer, Morpho launched Morpho Blue, an architectural shift that abandons the multi-asset pool concept for hyper-isolated primitives. Morpho Blue deconstructs the multi-asset pool into independent, hyper-minimalist, completely isolated lending markets. The entire core primitive is written in roughly 650 lines of gas-efficient smart contract code.
Right.
Instead
Super
of complex logic, each individual market is composed of exactly 5 parameters: a collateral asset, a loan asset, a liquidation loan-to-value ratio, a price oracle, and an interest rate model. Once deployed, these rules can never be altered. This strict immutability stands in contrast to legacy systems. Traditional monolithic pools require complex decentralized governance votes or the intervention of admin keys to alter risk rules post-deployment. By utilizing absolute isolation, bad debt in one Morpho market is mathematically quarantined. It cannot infect capital in adjacent markets. By making the settlement base rigid and isolated, Morpho Blue solves DeFi contagion by turning protocol-wide risk into compartmentalized individual pair risk. Because Morpho Blue is immutable, active risk management must be completely offloaded to external layers. This is where Metamorpho, or Vault v2, enters the architecture. It acts as a specialized curation layer built directly on top of the Blue primitives, allowing professional risk managers to actively control capital allocations, absolute caps, and collateral lists. Professional risk curators scale rapidly using this infrastructure. During a period of heavy macroeconomic liquidations in early 2026, Steakhouse Financial used this vault architecture to grow their managed deposits to $1.8 billion. Capital allocators concentrate their allocations based on direct borrower demand, routing massive capital into highly liquid Bitcoin collateralized markets like the CBTC to USDC pair. But dynamic vault curation introduces a new security vector. If depositors delegate their capital to a curator, they need hard guarantees that the curator cannot suddenly push a malicious parameter update. To secure institutional assets, Morpho relies on the Supervisor v2 module. This introduces a predefined time lock window. Any material risk parameter change proposed by a curator must sit in a mandatory waiting period. During this window, an independent third-party guardian actively monitors the queue. If they detect a malicious update, they can instantly block the curator's proposal before it executes. Securing the parameters is only half of institutional curation. The other half is regulatory compliance. To handle this, Morpho utilizes a dual compliance gates architecture to filter exactly who can interact with a vault. The first type is the permanently permissionless vault. A curator can use an abdicate function to lock the gate address to 0. This hardcodes the vault to remain open to the public in perpetuity. The second type is the permanently gated vault, designed for regulated entities. This setup binds the vault to a specific, immutable KYC verification or whitelist compliance contract. These gated compliance contracts must adhere to strict engineering standards. They must never revert or consume excess gas, eliminating the risk of denial of service loops that could accidentally lock up user capital. By layering Vault v2 and Supervisor modules over Morpho Blue, institutions can deploy sophisticated, regulated credit strategies without compromising the permissionless security of the base EVM layer.
Right.
While isolated markets manage variable rate credit, traditional corporate treasuries still face a structural barrier to entering on-chain finance. They cannot effectively manage a balance sheet when interest rates fluctuate dramatically from block to block.
Right.
To resolve this volatility, Morpho designed Midnight,
This
an
is super cool.
open-source, fixed-rate, fixed-term lending primitive. Morpho Midnight abandons arbitrary utilization curves. Instead, lending and borrowing are structured entirely around the trading of fungible units that function identically to zero-coupon bonds. Within a market, buying units establishes a credit position. Selling units establishes a debt position. Both unit classes settle precisely at their par value upon reaching a predefined calendar maturity date. This creates an efficient pricing mechanism. The simple interest rate is mathematically implied strictly by the discount at which the unit trades relative to its final par value. Historically, building fixed rates on-chain resulted in severe capital fragmentation. Liquidity was trapped and segregated across dozens of separate asset and maturity combinations. Midnight addresses this fragmentation through an intent-based conditional liquidity model. Market makers publish executable signed offers off-chain. They specify the terms, price, and capacity they are willing to trade, but they do not lock up any of their underlying capital in a smart contract ahead of time. The required liquidity is pulled directly from the maker's wallet at the exact millisecond a taker submits the offer to the Midnight contract on-chain. Because execution is atomic, liquidity providers can quote capital across endless maturities and collateral configurations simultaneously.
Wow.
It eliminates the cost of idle capital and makes on-chain fixed-rate lending efficient. The complete architecture of the protocol now operates on 2 tracks: variable isolated markets through Blue, and fixed maturity zero coupon markets through Midnight, both sitting beneath Vault V2 risk routers. This combination of isolated risk, predictable financing costs, and strict compliance gates replicates the core functions of a traditional financial prime brokerage, built entirely on-chain. Traditional finance is already physically connecting to this architecture. Institutions are utilizing direct, native integrations with major digital asset custody networks. Platforms like Anchorage Digital, Taurus Protect, and Fireblock's Earn program allow regulated entities to deploy stablecoins into Morpho using standard ERC 4626 fault receipt tokens directly from their qualified custody environments. The structural governance of the Morpho token provides the final layer of this institutional framework. To align the protocol's total value locked with institutional utility, the Morpho Association signed a binding strategic cooperation agreement with alternative asset manager Apollo Global Management. Operating under a programmatic mandate, Apollo was authorized to acquire up to 90 million Morpho tokens, exactly 9% of the total supply, over a rolling 48-month period. This partnership introduces persistent, multi-year buy-side demand. Crucially, the acquired tokens are locked behind strict transfer restrictions, preventing market dumping and removing active float from the liquid supply. The accumulation serves an operational purpose. Apollo uses its governance weight to directly co-curate tokenized private credit and real-world asset lending markets built directly on Morpho's rails. Through the separation of immutable settlement and modular risk curation, Morpho provides a framework for integrating on-chain credit with the standards of regulated financial institutions. It moves beyond initial DeFi experiments to provide the infrastructure required for digital commercial banking on public rails.
That's super cool, but I just wonder if anyone can launch a market on Morpho, or if you need to maybe like be qualified in some way. So when I go to
Go ahead. I'm guessing that you need to be a qualified custodian.
I don't know what the requirements are for something like that, but these are just the markets. That's not necessarily what I'm looking for, though. Let's see. Vault curation. Build lending products that scale. Let's take a look at this. So Morpho curation. All right. Thank you. Let's take a look at this. How would I, curate a market on Morpho if I wanted to? Is that even something that I can do? Okay, so curator responsibilities, borrower needs, depositor needs, okay, operational requirements, establish and maintain secure role assignments, create and manage market listings effectively, market curation. Okay, so I wonder if I could just have a bunch of AI agents do this for me. Why not? So public allocator, key advantages for curators. Let's see, tutorials, create the vault. Yeah, it looks like anyone can do this. Deploying a Morpho Vault V2 is a permissionless process that anyone can initiate. This guide covers 3 methods for deploying your vault, ranging from the simplest user-friendly interface to more advanced technical approaches. Use the Curator app. There's an app. This is the Curator app. No, these are vaults. So I wonder, where is the Curator app? Curator app, there it is. Create a vault via the Curator app. So let's check this out. I didn't realize it was so straightforward to just launch a vault here on Morpho. I had no idea. Okay, so all vaults and Curator V1. So let's see here. This is like an Explorer, Curator V1. Let's see what this looks like. Is this look at that. Yeah. Okay, get started. Select a vault on the list to get started on your Curator journey. Okay, let's select a vault. How about, CBBTC vault? How about one of those? Let's see here. RE7, MEV Capital, Gauntlet. Let's go RE7. These guys are smart. Switch to this vault. We recommend using a Gnosis Safe app. Yeah, so we've got a Gnosis Safe that we can use. But what does it mean? It says if this vault by RE7 Labs aims to provide above market Coinbase wrapped Bitcoin yield by enabling leveraged yield strategies. Okay. So I wonder, how do I create my own vault? How do I create my own market here? I don't necessarily want to just, use one of these risk curators. What if I want to create my own? It says that it's permissionless, but if I've got to rely on one of these curators, then is it really permissionless? I'm trying to understand here. Maybe I'm missing something. That could be. I might just be missing something here. But yeah, I don't know.
What's that button in the top right? Connect what? Connect server?
Connect wallet.
Oh, wallet. Okay.
Yeah, so this is definitely interesting to me. Worth another look. And what I'm thinking here is, maybe with this, if it turns out that we can actually deploy on here, curate a vault, maybe deploy on Morpho and then deploy on Euler and compare the two, because I know what it's like to build and deploy using Euler. It's very straightforward. But this is, a little bit more complex, I would say, than, over on Euler. Whenever they try to use an app like this, like a user interface like this, I don't know, it seems to me like it actually makes it more difficult. Like command line is easier. But there's something that I want to share with you guys. We've got a lot of people on the call today. Yeah, go ahead, Mike.
No. I was saying, yeah, go ahead.
Yeah. So check this out. I've got some really cool stuff that I want to share. So this is the Node website, right? But in the next couple of days, maybe next couple of weeks, I'm going to take this live. So I want to share this. This is super, super cool here. This is the trader's game plan. And this is like a secret weapon that I've been working on. Just
this is what I was talking about, that you should look at deploying on as a DApp, using Zenith on Canton.
Yeah, dude. Yeah, this definitely could. It definitely could do that. Because the next step for me with it, I'm going to walk everyone through this right now. The next step for me with this project is building an automated and programmatic strategy builder into this, and then building a back tester in, and then making it so that there's actually a deployer contract where people can connect their wallets and open positions and actually run automated trading strategies using this builder. So I want to just share with everyone what this does. So what I wanted was the ability to be able to go back and forth with, a risk manager, a quant, and a psychologist, and a technical analyst, a trader trained on, a couple of dozen books. And, I wanted to be able to go back and forth with like a PhD level quant trader.
A better expert.
Yeah, a real expert. Yeah, And so that's what I built. And I'm going to share with you guys because this thing works. It's blown me away. Okay. So check this out. You start by basically like having a conversation, a bit of an argument with the Hermes agent about your trade idea. It's going to push back. It is not just going to roll over and say, oh yeah, that's a great idea. Why don't you just go all in, 100x leverage, bro, for sure. YOLO. It's not going to tell you that.
It's good.
No, it's dude, you're going to see in a second here. I'm going to show everyone this thing live. So the first step is you plan a trade and you have a conversation with the agent. It's going to, give you one unified dashboard that gives you all the important metrics, connects to, Hyperliquid and GMX right now. And all of your trade ideas. And then once you're done with the idea, it logs that as a journal note. And then when you enter the trade, because you connect your wallet and it pulls from Hyperliquid and GMX, it can see your positions. And so it's going to track your positions. And then when your positions close, it's going to attribute that position to your journal note. So it creates the journal for you, and the journal learns because it's connected to Hermes. So, and then all your positions are watched while you sleep, And so you can connect your Telegram, Slack, WhatsApp, or Discord so that you can get alerts and insights from the agent on your open positions and your performance. So let's take a look at this. Check this out. This thing works. So we're going to go ahead and we're going to sign in. And I'm just going to go ahead and sign in. This is, I haven't made this thing public yet, but after you sign in, okay, so this is a brand new account. I haven't opened any trades here, no positions, no nothing. So I want to go ahead and start off just by, maybe I want to connect my wallet, right? So I got my bankroll, I got my name in here. Okay, got my wallet connected, and it is connected, and I think it's also synced up. I can link my Telegram in here. Let's go back to the dashboard. And what I want to do is, okay, so I have no GMX Hyperliquid stats to load because there have been no trades in this wallet. Not yet. We're going to trade live, not today, but over the next couple of days and couple of weeks. I'm going to trade a portfolio live using this tool. And then I'm going to open up a wait list for anyone who wants to subscribe to it and be able to use it too. It's that good. So check this out. Let's come up with a trade idea, Mike. I'm going to click new trade. Okay, so what are we arguing about? What are we? Remember, you have a conversation with the agent, right? So what are we talking about here? Well, what do I want to trade? Well, I want to trade on Hyperliquid. That's where I want to trade. What do I want to trade? What's my idea? Well, if I bring it on over here to Hyperliquid, just real quick, I've been thinking about maybe trading gold. I kind of think that gold, after running up. If I just take a look at the over on TradingView, I think that now that gold has run this big parabola and started to correct, if we zoom out from a daily to a monthly here, the last time there have been only 2 other instances where gold put in parabolas like this. The last one was 2011. And then before that, I think it was like 1980 or something. But when you get the parabola and then the 4 red months, it tends to continue to the downside. So my thought process here is, okay, well, maybe if I want to get short gold. That's my thought process with this. So that's my trade idea. I'm thinking, okay, maybe I want to trade gold. Maybe I want to be short gold. So I'm going to go ahead and I'm going to go ahead and type in the ticker here. It finds it over on Hyperliquid. I'm going to go ahead and click through. All right, so here's the market on Hyperliquid. And let's see here. I want to be short. So what's my opening thesis? What am I thinking about? What's my trade idea? After putting in, let's just type it in, it's natural language. After putting in a parabola and now correcting for the last 4 months, I think gold may continue to move to the downside to potentially as low as, let's go ahead and hop back into the chart, because remember, this Hermes agent, this thing, it can read charts. So I built that in, and it knows like the top 50 most common chart patterns. Okay, so I'm thinking to myself, all right, well, if gold's trading for 41.30, let's say, and it looks like there's some support at 4,100, what type of trade do I want to enter? Where's my target? So maybe my target is, down here at 3,900, between 3,900 and like just below 4,100. That could be a target for me. So I'm going to bring it back on over here to the Trading Game Plan app. So after gold put in this parabola, now it's been correcting for the last 4 months, I think gold might continue to move to the downside to potentially as low as 3,900. Let me go ahead and put a $, 3,900. And I want to get short around the current level. Okay, so I'm going to go ahead and open the case. We're going to open the case with Hermes. Check this out. This thing is so cool. It does exactly what I want it to do. So over here on the right-hand side, we've got our trade ticket. We've got our entry zone, our stop, our target, our position size, the leverage ratio, win probability, expected value, and R value. So risk reward. So we're always thinking in terms of win rate and risk reward and position sizing. That's what we're thinking about here. So, and this app does all that for you conversationally, okay? So you literally have a conversation with the app about your idea, and it does all the math for you. And it's going to push back, and it's going to ask you all the questions it needs in order to be able to fill this stuff out. So check this out. Let's go ahead and read through what it just gave me based on my trade idea. It said, okay, so it ran the multi-time frame analysis. And what the multi-time frame analysis actually is it's a bunch of indicators that I like to use, and it's programmatically using them and applying my trade idea to the chart, looking at all of the different indicators, coming back with a technical picture. So it says, okay, the technicals are in, and they paint a very clear but nuanced picture. First, you're spot on about the direction. The trend is unambiguously bearish across all time frames I checked: 15 minutes, 1 hour, 4 hour, and daily. The current, and I could probably make this weekly and monthly too. The current price of 41.12 is well below the key moving averages on all of them, on every time frame. The overall technical alignment is strongly bearish, and this is great. Check this out. However, there's a major warning sign for entering a short right now. It's extremely oversold. The RSI is deep in oversold territory on multiple time frames. It's 14.7 on the 4 hour. That's really oversold. 23 on the daily. Again, below 30 is really oversold. So this suggests the downward move is overextended and could be due for a bounce or a consolidation. Entering a fresh short at these levels carries a high risk of getting caught in a sharp relief rally. Right? How good is that? And so if we just bring it back on over the chart, it's exactly right. So, we're coming back down. This is support. This horizontal, this is support. If we get a sharp relief rally and then roll over, well, that's what the agent is warning us about here. It's saying, hey, this thing's oversold, man. RSI is deeply in the negative, very oversold. There could be a sharp rally. So while your thesis seems correct, it says your timing could be improved for a better risk reward setup. Instead of
Crispy says he's in that trade now.
Yeah. It
looks like he has a stop at 4,200.
Yeah. So, but look, imagine being able to talk to like an agent that is a brilliant PhD trader about all your trade ideas, and it gives you all the levels. It does all the work for you. And then it could even turn your trade idea into something that you could deploy, programmatically on Hyperliquid using code, and it monitors everything for you. You literally just come up with the idea, have a conversation with it, and then it can do everything else. So that's what I built here, and it actually works. So this is what it says. Instead of shorting into the teeth of these oversold readings, what do you think about waiting for a bounce? You see that? A retest of a broken level or a moving average could provide a much safer entry. For example, the 20-period EMA on the 1 hour is at 41.76. Shorting on a failed retest of that area would give you a better price and clearer level to set your stop against. So let's go ahead and take a look. It says, for example, the 20-period EMA on the 1 hour is at 41.76. Let's take a look at that. So over here, the 1 hour, and what did it say? The 20-period EMA. So let me just go ahead and change this 50 to a 20. And this is an SMA, but it's going to be pretty close anyway. So let's just go ahead and throw this down. There is the 20 period. We're on an hourly, and let's zoom in. Yeah, so on the SMA comes in at 41.96. I'm assuming the EMA comes in at 41.76. And so what the Hermes agent, what the bot is saying is, why don't you just wait, man, for a rally up to like 41.80, wait for a little bit of a relief rally and then get short, because you're shorting into like really oversold RSI readings. Like, we got an RSI on the hourly below 30. And if you zoom in even further, it's well below 30 on the shorter time frames. So Like, not good. You don't want to be getting short into oversold ratings like that. And then it says it's going to start to ask me questions again. Remember, this is conversational. So it says, does that make sense? And to clarify, when you said 3,900, did you mean that as your price target? I'm going to say, yeah, that makes sense. So it's probably, and I'm going to make it so that you can talk to it and it'll hear you, like a microphone. Like, you'll be able to just click the mic and just chat with it. That's what I want to be able to do, is just like go back and forth talking to it like I'm having a conversation with a human, but like a brilliant PhD trader human. So just to make it easier to use. So yeah, that makes sense. It's probably better to wait for a bounce before getting short. And yes, my target is down around 3,900 or so. There we go. Let's see what it says. So it's going to run through the next layer. So this progresses you through different layers of questions and conversation so that you can complete the trade ticket. So the trade ticket is basically like all of your data points. It's your risk.
All your parameters that are going to be set in the position you enter.
Exactly, because you need this. Otherwise, you're gambling. So this is great. And in a second here, check it out. It says, excellent. Let's build the plan around that patience. A bounce to the 4150 or 4175 area looks like a prime spot to watch for an entry. That zone would test the broken structure and the 1 hour, 20 period moving average. If the price climbs to that zone and stalls, it could be the high probability entry you're looking for. If you did get a fill there, say around 4165, what's your invalidation? Where would you place the stop? A logical spot could be just above the 1 hour 50 EMA, which is currently at around 42.32. With that entry and that stop and your target of 3,900, we'd be looking at a risk reward of 3.8 R. So if I risk $1, then potentially I make $3.80. Pretty good. What's your confidence in this setup? Give me a win probability as a percentage. Once I have that, I can run the numbers on sizing and expected value. Great. My win rate is 52%. That's real data. That's what I happen to know, that for the last 200 trades I've taken on GMX, my win rate is 52%. And enter. My win rate is 52%. So what it's going to do now is it's starting to build a trade for me. Really what it's doing is it's giving me all of the risk parameters. It's also, if this wasn't going as well, like if it didn't like my trade idea, it's going to tell me. It's going to say like, hey, you should not be buying, dog shit coin, like, or whatever. This thing, it's not going to mess about. Like it's going to tell you what it thinks. And if your trade idea sucks, it's going to tell you that, and you need that. So now it runs trader stats, right? Because I don't have any trades on this account. So it's not able to pull from my journal. It's not able to pull from my Hyperliquid account because I don't have any trades in this account. So it's just relying on me to self-report. But once I've got, data here, it'll just pull the real data. So it says, okay, the data is in. It looks like you don't have any trading history on this account yet, so both your exchange and journal win rates are at 0. That's perfectly fine, but it means your 52% win probability is an estimate of your future ability, not a reflection of your past performance. Well, in my case, it is a reflection of my past performance. For a new setup, it's wise to be more conservative. A good trade setup might have a 50 to 60% win rate for an experienced trader, but when you're starting out, it's safer to plan for a lower number. How about we run the risk calculation with a more cautious 48% win probability? This will give us a more robust plan, and if you outperform, it's a bonus. If you're okay with that, I'll plug in the numbers. It's giving me an entry at 41.65, a stop at 42.32, that's a 1.6% risk, a target of 3,900, that's a 6.4% profit, a win probability of 48%. And it says, ready to see the risk valuation? Yes, I am. And please think about what it would look like to use some leverage. Great. So now I want to throw some leverage in the mix, right? And it's going to run all the calculations based on a handful of different leverage ratios. So it's going to start with 2x. Usually it'll take a look at 5x. And most of the time, it's not going to go past 5x. Sometimes it goes as far as 10x, but I doubt it for this. So it might just go 2, 3, 5. 2x leverage, 3x leverage, 5x leverage. It's running the risk engine again. It's going to give me a bunch more information. And then after another 2 times going back and forth with it, then I will have landed on a solid trade idea with an entry, a stop, a target, an EV, my R, and position size. So check this out. So here we go. This is a solid setup. Here's the breakdown. I've got a positive EV. The trade has a positive, expected value of $16.88 for every $1,000 of position size unleveraged. That means it's a profitable setup on paper. So the suggested size 1R, the model suggests a base risk unit of $150. That means for every $150 you risk, you stand to make $600. That's a roughly 4R trade. Remember, we were taking a look at 3.8R. This is based on a conservative fractional Kelly criterion. Kelly criterion helps us size positions to optimize for bankroll growth while minimizing risk of ruin. You see, this is all the quant stuff that you need to do before you enter a trade, but that no one really does, except for the guys at institutional desks. So leverage viability. It says the good news is that leverage is viable here. The stop loss is tight enough. At 5x leverage, your liquidation price would be about 18.4% away. I've still got to fix the risk engine when it comes to leverage. It still doesn't really understand that properly. So we're going to go with 5x leverage, and that would be a ton of leverage, but we're going to go with that. So given your 10K bankroll, risking $150 or 1.5% of your capital is a very disciplined approach. So how does 150?
David, real quick, can we kind of summarize a little bit? I mean, we're over time and stepping on the blockchain report pretty heavy.
Yeah. So how does $150 in risk sound to you? So let's just say I just want to show this finished here. So
no. I mean, go all the way through.
Let's go with 5x.
Everything. Just
got it. So check this out. Let's go with 5x leverage, and $150 in risk sounds good. Great. So I think that this is the final round of going back and forth, and then it should give me the trade ticket. And then once I've got the trade ticket,
I definitely want to see that and kind of finish this out. I just maybe not read through everything. Yeah.
So this is pretty freaking cool, man.
Yeah, it is.
Yeah. So it's giving you see the market telemetry. This thing is loading. I think that's the trade ticket stuff. So any second now we should have a full trade setup, with everything that you need. So great, here it is. So here's the complete plan. Awesome. Okay, great. Now it says it's going to endorse the plan. So the agent actually tells you whether it likes your trade or not. So are you happy with this plan? Yes. Journal it. Now it's going to journal it. Remember, you can't progress to the trade ticket without a journal entry. You need the journal entry, otherwise it won't let you progress. And I did that intentionally because how many times have you decided that you wanted to journal a trade and never actually journaled the trade, right? How many times have you said, oh yeah, I'll write it down. You take your pen and then it just falls out of your hand and you don't end up writing it down. So this does it for you. It tracks everything. So look at that there, and it's Hermes endorsed. You see that?
Yeah,
so here's the thesis. Here's the journal entry. Let's just take a look at what this looks like. This is the entire journal entry for that trade that we just walked through. And now all I've got to do is execute. So yeah, that was pretty cool. Thanks for bearing with me, you guys.
No, absolutely. If we had more time, I want to make sure that we don't step too heavy on the blockchain report. But yeah, no, it's. I think that's going to be a super valuable tool. Once you're able to launch that, because I know for somebody like me, I need somebody that's or an AI that's much smarter than me, that can crunch numbers and that knows is able to set those parameters and let me know. It's because I entered a short and got lucky and made 30-something% on a Bitcoin short, but most of the time I freaking lose because I'm not a trader. I don't know how to read charts. So having a tool like that would help somebody like me immensely.
Absolutely. And so, once I'm done building it, it works already. But once I'm done building it, I'll open up a wait list so that people can, get access to it once it's ready for public release. But it already works.
We need to have it to where like they need to either set up not a paid account, but just like set up an account on the Node.pro or like join the Discord, something like that. Just they need to be a part of the community.
Yeah, it is. So I'm super excited about that, man. Like that's a really, really cool little app right there, and it provides a ton of value. And there's nothing else like that. And the last thing I'm going to build today is a programmatic strategy builder where it takes your trade idea and turns it into something that you can actually deploy onto Hyperliquid just using your wallet, but algorithmically. So it'll all be managed for you. So that's what I'm finishing today. And then it's literally just a matter of like turning that into a product and then launching the thing. And man, so maybe another couple of days because these new AI models, man, are just so good. Yeah,
no, I'm excited to see it. But I appreciate all of you tuning in. And if you found the information, the deep dives, the news, the app that David is building, you found any of this valuable, if you could, please, doesn't cost anything. Hit the like, subscribe, share out the stream or the channel. And until next time, Veteran Crypto out.
Peace.